This week, we're gonna be talking about Bill Ackman. You probably already know about Bill Ackman. He's the billionaire hedge fund manager of Pershing Square Capital. Many of you probably know him best when he lost his shirt on a very public short position on Herbalife. This was famously a proxy battle between one billionaire, single billion Bill Ackman versus 40 billion Carl Icahn. And this ended exactly how you'd expect. Imagine a fight between welterweight Conor McGregor versus heavyweight Mike Tyson in his prime.
I really sort of had it with this guy Ackman. He's like the crybaby in the schoolyard. He was like one of these little Jewish boys crying. As far as I'm concerned, the guy is a major loser. I never said that I want to be friends with you, Bill.
Okay, let's move on.
I would do this with you.
Let's
you were
move
the last man on earth. I appreciate, Bill, that you called me a great investor. I thank you for that. Unfortunately, I can't say the same for you.
Anyway, Bill Ackman continued his loss-making strategy with Netflix in 2022. About 3 months ago, he bought $1 billion worth of Netflix stock, around $400 a share, and having dumped it this past week at around $230 a share. It's this exact type of loss-making strategy, the buy high, sell low strategy, that Wall Street Bets follows. You know, Wall Street Bets still stumbled into a huge winning trade with GameStop. Anyway, let's talk a little bit about the Netflix fallout, whether there's profit to be made here or elsewhere in the market. Anyway, I want to quickly pull up a chart on Netflix. Let's go over it really fast. What are my thoughts here? Let's look at a candlestick. Now, we see a huge bleed out on one day. We see a huge breakdown. Now, this happened a few months ago where it broke down from 508, and you guys recall my Sunday videos. I was actually talking heavily about Netflix stock, how you should be buying this bounce, buying it here for a potential bounce, and it worked out. It was a very good trade for me. It was very lucrative. We're kind of in the same spot. We had a breakdown. I'm not 100% convinced that the selling is over here though. Usually when a large whale like Bill Ackman dumps a stock, he's expecting it's gonna sell and it's gonna continue to sell. So I'm guessing there is some thought that the bubble has burst for a lot of these stocks like Netflix, Roku, things like that that have been perpetuating Netflix stock higher for a long time. It was a streaming bubble. And potentially that has burst right now. And when bubbles burst, people continue to sell for long periods of time. No one really knows if the actual trade is a bubble until, hindsight's always 2020. We'll know a year from now. Personally, I think it is worth taking a trade here very, very short term, because what oftentimes happens is it might not happen right away. It might take some weeks or so, but you'll tend to get like a bounce from here. When big time sellers get out like that, it's sometimes a good idea to maybe put some money in, but keep in mind the trend is down right now. So I would be looking for a bounce, but if we don't get it, take the trade off and go with reasonably small size, because this thing can continue to bleed out here. I personally would take this trade, but also know if it breaks below 200, all bets are off, because there are people calling for Netflix to drop below 150, even 160. So we'll see. Maybe David Einhorn finally made some of his money back after all these years of failed trading. Now, the next ticker I want to talk about, and it's kind of in the same space, is Roku. You look at the streaming wars, Roku's another large player in streaming. Now, Roku had a huge breakdown. It broke below 100. So I would say all bets are off on Roku unless it can cleanly breach above 100. Now, I had a very good lucrative Roku trade last time it had a breakdown. And I did discuss in a Sunday video, I'd taken the majority of the trade off, and the trade's pretty much done. I thought it was gonna bounce a little bit harder, but it didn't. And then it had a bleed out. So I'm actually thinking there's a large potential that there's gonna be some buyers in Netflix stock, just the same way we had buyers in Netflix before the last time it crashed. We had buyers in Roku, like right around here. But then it was followed out by a bleed out, which is just constant selling. And I think that's the same case, but this is the reason I'm watching these two stocks heavily this week, because the overall S&P did correct. If we take a look at the S&P, It had a huge breakdown in the last 2 trading days. I think if the S&P bounces, these 2 stocks could go up pretty big with it. So keep that in mind, and let's move on to the next topic right now. So the next trade I want to talk about is Twitter. Obviously, with Elon Musk still in play. The Elon Musk trade, we saw a huge boom right here and then kind of correcting, but it looks like it wants to make another run higher. Earnings season is also coming up this week. People might be pricing in good prospects for earnings on Twitter. That's this week on Thursday. We'll get into that later on, but that's another reason this trade is still on for me. Let's go into earnings calendar. There's a lot of earnings this week. I'm gonna stick to the main items that I think will make good trades. I think Activision is still in play as of right now. We have earnings for Activision. The news of the Microsoft buyout, helped propel its stock. I don't know if it's really going to go too much higher than here, but it is usually a good earnings season trade. Outside of that, on Tuesday, let's go right into it. Microsoft. Microsoft is well off its highs. The market's corrected. This is a name that I'm looking to help bring the market back. Because if all of FANG starts dropping like, rocks here, it's going to be hard to make money. Same thing with Google. We have Google on Tuesday as well. You can trade this the day before, but you can kind of see Google was like around 28.70. It's corrected quite a bit, you guys, almost 20% in a month. For those people who are feeling really bad about their investment returns and stuff, these 2 stocks alone have corrected a lot. And then lastly, we have Chipotle Mexican Grill for Monday. Oh my God, $1,600 a share, barely corrected, but usually a great earnings trade, you guys. I'm watching this stock. Let's see what happens with Chipotle Mexican Grill. So if we continue to look at earnings calendar items, we have Qualcomm, which has been having quite a bit of a bleed out. I might take a small nibble just before earnings. And dang, Facebook never recovered from its last earnings, you guys. Wow, look at that. That was quite a brutal breakdown. Facebook's at 184. I might do my patented earnings season gambles right here on Facebook. We'll see. That's on Wednesday. We got Facebook. Dang, yo, has not recovered. You can find a clip of Kevin O'Leary talking about how he's buying a crap ton of Facebook right before their last earnings, and how the stock plummeted literally right after. It's so great. I love watching him lose money. Nothing like it.
That's what I'm doing. I'm going to bring my weighting back up to a max weighting, take advantage of a 24, 25, 26% discount.
These are some scoundrels, man. Just learn how to trade yourself, all right? And don't trust these people with your money. If anyone is going to lose Frugal Tiger's money, it's going to be Frugal Tiger, not Bill Ackman, not Kevin O'Leary, none of these fuck faces. These amateurs, bureaucrats, they don't know anything. They make money on assets under management. Bill Ackman's sell of Netflix only makes sense if he has another trade ready right away. I would have waited for maybe a little bit of a bounce back, or maybe the streaming bubble's done. Roku is gonna crash even further back down to 40. Netflix is gonna crash down to 160. Who knows? I guess we'll see. Anyway, my tangent is now done. Let's go on to the next ticker for the week. Let's go on to Now, which is ServiceNow. Once again, damn man, tech is getting beat up. I don't know if it's a good buy here, but if you take a look at ServiceNow, it's right around support. Last time it had a huge run, so we'll see. That's not going to necessarily stop it. If it breaks below $457 a share, it's got a long way to fall, but it doesn't seem like it wants to stop right now. The market itself, we're going to see if the S&P can give ServiceNow some support, or if it's going to continue to break. Let's look at Spotify. Spotify, geez, man, what is going on? These stocks have went in from bubble to total crash so quickly. I feel like it's less of a name than Facebook to do an earnings gamble, so I might do an earnings gamble on Facebook alone. We'll see how that goes. Lastly, we'll do Pinterest. So Pinterest on, oh my God, total bleed out from 80 bucks a share. I remember it being $80 a share because I was trading it in this range, daily, waking up, buying it around 60, flipping it. But oh my goodness, oh my goodness gracious, what is this? So yeah, some of these social media companies like Pinterest, I never understood how Pinterest made money, but it'll be kind of interesting to take small pieces of a lot of these companies that have bricked. Kathy Wood's legendary teledoc that she does not seem to want to sell for the life of her, even though it jumped to $300 a share, now back down to $58 a share. I don't know what ARK Invest is doing. I don't know if they got out. Last I heard, she was still in it. I haven't really checked the indexes. Now we go into Thursday. So Thursday we have Apple. Oh, Apple's been holding pretty good. So much for all FANGs have been crashing. I mean, Facebook's been down, Google's been down. Apple's been hanging in there, and I think we need it to hang in there for the sake of the market, because if it fails to hold, I think it's gonna, the whole market is gonna go down. Amazon's been holding pretty good. I mean, yeah, did it drop from 37.50 to 28.85? Yeah, but like, it's relatively speaking, it's not like a Facebook where it just crashed and just, you know, just stayed there forever. So Amazon's doing all right. Intel is on Thursday as well. Usually AMD is the same week as Intel. So Intel is right around $46 a share. Kind of is around the support area, but that doesn't necessarily mean it's ready to run. I don't really know what else to say about this. I felt the business was dying for some time, but they've opened like some sort of gigafactory somewhere. Well, the equivalent, but like they've opened a factory to produce chips more locally than rely on Taiwan Semiconductor and places like that. And then lastly, we have Twitter. I mentioned this earlier. I'm watching this for Elon Musk trade, but they have earnings as well on Thursday. On Friday, we are taking a look at ExxonMobil, which is having quite a bit of a run because of the Russia-Ukraine issues and gas prices. And Chevron is the next item on my to watch list. Once again, another oil company has a lot of profitability potential due to oil right now. And then lastly, on Friday, we have AutoZone. So that's everything on my to watch list for this week. I think I missed AMD somewhere. So I did not miss earnings on AMD. I just always remember AMD and Intel being around the same range. AMD is not for a little while longer. Anyway, that's it for me. If I sound a little depressed, it's not because I owned Netflix. I've been very tired. Anyway, that's it for me. That's all I have to talk about. I hope you all have a good trading week this week. Once again, I think Netflix is the main trade of the week, but watching these other large FANG names like Facebook, Google, Amazon, all that fun jazz. That's it for me, you guys. Till next week, don't go broke.
I just want the money.